Good afternoon, sir.
Very good afternoon.
Sir, we'll start the session if you are comfortable with.
Wait. I've just logged in from the mobile phone.
Okay.
I'm trying to log in from the laptop.
Okay, right, sir.
Because this is on. You had sent me the link on WhatsApp.
Oh, through WhatsApp. Okay, right. Can I send the link to your mail so that it is easier?
Not necessary now. I think it's open.
Yeah. Yes,
sir. How many people are there? 56 people. My God.
Three of us are. We are three of us. Then
Okay.
it basically is a 90 plus strength.
Okay.
But today, ICICI Securities, has started the interview session. So some of them are there. So once their session is over, they would be joining here.
Okay. Yeah, I think we can start now.
Yes. Right, sir. So before we begin, let me speak a minute or two. Good afternoon, students.
I need to share the screen, so you'll have to make
I
me.
will make you the. Sir, I have made you the host now. Now you can share the screen.
Yeah. Thank you.
Yes, sir. Before we begin, good afternoon, students. Some of you can unmute and then. Yeah.
Good afternoon, sir.
Yes, right. Today we have Dr. Anil Kumar Garag. He is my best friend, you can say, because both of us are in the same area. Security analysis and portfolio management. Whenever we meet, we speak of these aspects only. And he is my junior at Kausal Institute of Management Studies, and he was working with a stockbroking firm long time back. Sir, is it? I've forgotten the name of that firm.
I used to work with the NH Securities.
NH Securities. So, and he has got hands-on practical experience, in the equity market. Then, like me, he shifted to academics. And the last assignment in academics was as the director of GBS management school. And now he is independent consultant. Consulting, he is a business partner of Edelweiss Securities, and he has got his own management consultancy relating to the engineering part of it. So basically, is an engineering graduate and MBA from Kausal Institute. So he's into this. Sir, I welcome you to this session, and we are very thankful to you for accepting our invitation to deliver the guest lecture. And these are the students of third semesters, and there are 92 students who have taken security analysis and portfolio management. The syllabus part is complete, and there are 74 students. 72 students. 71 students. Onkar, mute yourself. Onkar. Yeah, there are 71 students who have taken derivatives market, the syllabus of which is also complete. And because you are very strong in fundamental analysis, so I requested you to deliver the lecture, guest lecture on fundamental analysis for SAPM. Sir, I have made you the host, and I see you have already started sharing the screen, and I leave it the stage to you. Please continue, sir.
Okay. Give me 1 minute. I'm just trying to.
Yes.
I'm not able to see anybody. I'm only able to see the screen, so I'm trying to make some adjustments.
Okay, no issue.
Next only some
Onkar, mute yourself.
Rajendra sir, I'm not able to hear what you said. Could you repeat, please?
Sir, I've logged in through Rajan sir's login ID.
Okay. Share screen. Maintain current size.
It was visible just a minute
No,
back.
screen is visible, but I'm not able. I'm only able to see the screen. I want to see the participants plus the screen.
Okay, okay.
Side by side mode, yes. Otherwise, what will happen is I'll be only speaking to one screen.
True.
No.
Below, at the bottom of the screen, participants is being shown.
Yeah, it's there, but okay, I think I'll have to.
And you have to click on that probably.
And keep it here.
Yes. That would be.
Okay. Good afternoon, everybody. We are. I'm expected to speak about fundamental analysis. My presentation actually will look very academic because I have not made any presentation which is non-academic kind of thing. But I thought, let me just show you this photograph, this slide saying fundamental analysis and my name on it to start off with. Instead of going to the regular route of doing a PPT or something like that, I'd like to share with you my I'd like to give you some kind of insight into how to do this fundamental, where to get all this data and how to do fundamental analysis, because that is more important. As you all know, fundamental analysis is basically what EIC, you call it EIC analysis, isn't it? Economy, industry and company analysis. And I'll quickly go through this. I will not take more than 10 minutes for doing this presentation, just to set the context right. So first what we do is economy analysis, then we do sector analysis, then we do industry analysis. Then we do company analysis, management, financial management analysis, financial analysis, and then finally we do the valuation. I'm just brushing up on the theory so that we can go to the practicals straight away. Economy analysis. Why do we do economy analysis? Anybody? Can somebody write on the chat? You can unmute yourself and talk. Why do we do economy analysis?
Some few students can unmute and then answer.
And who does? Why do we do one question? Who does this economy analysis?
To know the overall market situation.
Okay, who does this? As an individual investor, do you do this economy analysis?
Yeah, sir, we'll do.
Okay. Can you share? If you are also doing, then can you share with me where do you get this data per capita consumption of any commodity per capita?
Sir, we get this, all the information through trading economies or
Very good. Fantastic. Who is this?
He is one interested student of SAPM, and Pawan is his name. Pawan, you can raise your hand.
Pawan B. Kandagal.
Yes, sir. Yes, sir.
Oh, fantastic, man. Very good. Anybody else? Oh, that's great. Let's go to trading economics.
And even some information will get through RBI bulletins, sir, like import and exports.
RBI bulletin very difficult. No, it's all difficult to read. In these times of instant information, RBI to bahut dur hai yaar. So it becomes very difficult to read. Oh, 20 years back we used to read this RBI bulletin and things like that. Now everything is available. I say, a snap of your finger, things are available. So great. So let's go to, for those people who are not used to this, let me share this. I think what I need to do is I need to share my screen rather than sharing the sharing a PPT. Yes. So here we have indicators of India. So you can see here stock market points, GDP growth rate, GDP annual growth rate, unemployment rate, inflation rate, interest rate, cash reserve ratio, balance of trade, current account to GDP, government debt to GDP, government budget, business confidence points, manufacturing PMI. Okay. If you are given these numbers, what do you learn from these numbers? How does it help us in understanding where our economy is going? Anybody?
Sir, by using the past year data, we can say that whether our country economy is growing or not.
Mistake. Okay. I would like to take you to another level. See, I had asked you a question in the chat. I said, who uses this economic analysis? And the people who use this most are not people who sit in India. The people who use this most are people who sit in Singapore, who sit in London.
Foreign institutional investors.
Yes, foreign institutional investors. Why? Because they have a choice of investing in various countries. They don't have, sitting in India, you have only one choice. You have to invest in this country only. As an Indian, you don't have a choice. You don't have a bigger choice. But being an FII, you have a choice of investing wherever you want. And there, they look at various countries and they look at the parameters of various countries and say, okay, let's see which country is going where, kind of thing. So let me look at country indicators of. Okay, let's look at the indicators. Let's say GDP growth rate. There you are. This is a little difficult to digest. The base is something very, base was disturbed in 2020. Nevertheless, if India is growing at 12.7%, if India's GDP is growing at 12.7%, what do you think? It is good, bad? What is it? Is this good?
Sir, it cannot say it's a moderate, sir.
It's moderate. Why?
Sir, still we need to develop, sir. By comparing to other countries like China.
where you can see that China is growing at 1.6%. 1 minute, I'm just picking up this point. ಇನ್ನು ಹೇಳಿದ್ರು ನಿಂಗೆ 2:04 ಕ್ಲಾಸ್ ಆಯ್ತು ಅಂತ. ಸರಿ, ಮತ್ತೆ ಅದು ಏನು ಮಾಡಿದ್ವಿ ಅದನ್ನ ಔಟ್ಲೆಟ್ ಪೈಪ್ ಇದನ್ನ ಮಾಡಿಲ್ಲ. ಮೂರನೇದು ಅದನ್ನು ಅಲ್ಲೇ ನೀ ಓಕೆ ಮಾಡಿ. Yeah. China is growing at what? 1.6%. And India is growing at 12.7%. Yes, let's continue the debate. I hope you are able to see this screen, no?
Yes, sir. It is.
Yes, sir.
Yeah. Any views on this? I think Pawan is only speaking, isn't it? Any views on this table there? India growing at 12. It is on top of the table. India growing at 12.7%. Next is United States, which is growing at 7%. Argentina growing at 4%. Turkey at 2.7%. Singapore at 2.3%. Spain at 2%. Switzerland at 1.7%. China 1.6%. Saudi Arabia 1.6%, and then so on and so forth. And then you have European area 0.3%, Brazil minus, Mexico minus, Germany minus, Russia minus, South Africa minus, Australia minus. What do you think about these numbers? Yashoda says it's good.
Sir, actually, it is good, sir. By comparing to other countries, it's good, sir. But what is a good bad sign is that before pre-COVID, the India's GDP is good, sir. But after 2020, GDP has gone down, but it is been recovering it, sir.
See, the problem with this kind of statistics. Have you heard about this sentence? Somebody said that statistics are lies. Liars and statisticians are one and the same. They can make whatever, they can change according to what they want. See, this ultimately this growth of GDP is not a good measure at all. I don't think it is a good measure at all. The reason being very simple. United States economy is 10 times bigger than India's economy. And if it is growing at 7% and you are growing at 12.7%, how does it matter? See, when a child is 3 years old, 4 years old, his or her height increases every month, every 6 months height increases. And let's say a 6-year-old child grows from 3 feet to 3 feet 6 inches. That is 20% growth. Whereas somebody who is already 18 years, even if he grows by 10 mm, grows a lot, isn't it? So it's not the right kind of example, but to put it in perspective, India's economy is much smaller. $3 trillion. $3 trillion growing by 12% is nothing in front of what United States is growing by and what China is growing by. If you look at what dialogue ಹೊಡಿಯೋದಿದ್ರೆ ಹಂಗೆ ಹೊಡಿಯೋ ಮ್ಯೂಟ್ ಮಾಡಿದ್ವಿ. So if US is growing by 7%, it is adding one India every year. In fact, when US grows by even 2%, it adds one India every year. Whereas India grows whatever. These are all growth rates, not so interesting. So what should we do? We should look at per capita growth. That is what per capita GDP growth rate is, what is a better better measure. So let's look at per capita GDP of the country. Now look at this. Where does India stand in this? Bottom. $1798. Can somebody just pull out a calculator and tell me how much is $1798 in rupees? कोई है? Somebody in the chat?
Not in chat, sir.
How much is 1798 USD in INR? Can somebody do this math, please?
It's almost around 1.35 lakh.
Yes.
Yeah,
1.35 lakhs is the average average GDP per head in a country of 130 crore people. Check China, $10,431. Nearly 5 times what India's GDP is, and China has comparable population. You can imagine the speed with which it is growing. You can imagine the GDP of that country, and of course, you can look at United States. $58,000. That's huge. So what I was coming to is, when you start doing fundamental analysis, you look at not only you look at the growth of the economy, but also you look at the size. So looking at the size, then you look at the growth. Obviously, but still you invest in those economies where there is growth. Why? Because wherever there is growth, there is money to be made. If growth is slow, then obviously money to be made is much less. Excuse me for 1 minute. Hello. ಇದು ಸಾವಿರ ಪ್ಲಸ್ ಅದ್ರದ್ದು ಮೋಲ್ಡಿಂಗ್ ಎಷ್ಟು ಉಂಡ ನಂಗೆ ಗೊತ್ತಿಲ್ಲ, ನಾನು ಕೇಳಿದೆ. ಹೌದು 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 ಮೋಲ್ಡಿಂಗ್ ಪ್ಲಸ್ ಮಾಡ್ಬೇಕಪ್ಪ. ಅದೆಷ್ಟು ಕೇಳ್ಬೋದು. Yeah. 135569. Great. So we don't look at growth of GDP. We also look at per capita growth of GDP. Then we decide whether this country is growing or not growing, because as an FII you have a choice of 198 countries to invest in. It's not 1 or 2 countries, and in that 198 countries there are so many companies. That's a different story altogether. Okay, so that's the first thing. Then per capita consumption. This is a very interesting thing that one has to look at. Let's look at indicators. Let's look at There you have. They're all in different currencies, so we'll have to look for the same currency. Anyway, you'll get it in other. You'll get it in the IMF website or BIS website or wherever. BIS is Bank for International Settlements, BIS.org, or International Monetary Fund website. There are reports, and then there is one website called Euromoney, 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 which is a magazine from European countries, but which carries a lot of data. Then you have data in marketwatch.com. That is one. That's one website from these Wall Street people, Wall Street Journal guys. So what we look at is per capita consumption. You know, in India, an average Indian per capita consumption of steel is around 3.25 kgs, whereas the consumption of steel in US is around 35 kgs per year, per head. So you can imagine where we are. Somebody just spoke that we are still developing. This is what is the measure of development. You know, what is measure of development as of now? Measure of development as far as economy is concerned is how much do you consume per head. So the more you consume per head, more developed you are. More steel you consume, more cement you consume, more aluminum you consume, whatever, more commodities you consume. Not food, because food, you know, there is a limitation on consuming food, because everybody has usually takes around 2,500 kilocalories per day. So more than that doesn't happen. So there is a ceiling there. Then 4:30, 4 o'clock. Okay, then we also look at per capita production and per capita supply. It's a very interesting, and one more interesting thing that we look at. For example, in Japan, per capita production of steel is the highest. Why? Because their population is the lowest, and Nippon Steel is one of the largest manufacturer of steel. Per capita steel production in US is also one of the highest because of the US Steel and things like that. Then we look at yields. Here, when we talk of yields, we are talking of yields in terms of not in terms of interest yield. We are talking in terms of productivity of fields of agriculture and productivity of various other industries also. So we look at what is the yield. For example, again, when we go back, let's say yield per hectare of wheat in US is 5 times that in India. Yield of cotton in Egypt is 10 times that of India. Yield of maize, or they call it corn in US, is 5 times more than what is there in India. Of course, they have their own agricultural practices. They have their own methods of having their agriculture done. But these yields also we look at. Why do we look at these yields? We want to find out whether these the economy is growing or not growing, or whether it is sustainable and things like that. Then we look at this interesting thing called savings or investment rate. This is something which will really which really decides what is happening. Let's look at, I think the savings rate is somewhere here. Productivity, wage growth. somewhere, I think, personal savings. Yeah. Where do we stand? Australia, Austria, Bangladesh. As a percentage. Okay, these are the savings investment rates of other countries, but it is common knowledge.
Anil,
Yeah.
you can take that G20 tab. Probably it is visible there. India's.
Let's look at Asia.
Asia probably.
Bangladesh, Hong Kong, Japan. No, it's not there. No, Indian data is not available.
Data is not available.
RBI data is available. RBI data says that India has a savings rate of around, it has fallen to around 18% or so. Earlier it used to be 25%.
Okay.
And another thing about India is, even if the savings rate is high, it was about 20% earlier. Now it is just below 20%. Even when it is, it is still considered as high. But even if it is considered, if it is high, the problem with this saving is that Indian savings mostly go into real estate and gold.
True.
And that makes the financial markets not so attractive. But probably next year, probably in the next month's time or next 2 months' time, we may see a small change happening. IPO, the LIC IPO is coming, expected to be to the tune of 45,000 crores or something like that. Let's see. And that happens, I believe once the LIC IPO happens, the market is going to correct, because a lot of money is going to be sucked in by the LIC IPO. The same thing happened with Reliance Power IPO in 2008. The same thing happened with the earlier IPO, I think one of the largest in 2006, I don't remember now. Today people were talking
2008, I also remember that
Reliance
Power.
The Reliance Power, after the Reliance Power IPO was that, at that time it was one of the largest. 10,000 crores.
True.
And that sucked out a lot of liquidity from the market. LIC IPO is expected to suck a lot of liquidity, because this, there are going to be a lot of new investors getting into LIC IPO. That is where the thing is, because once new investors come in, then money gets sucked out of the system. Anyway, so what we look at is, we look at investment rate of different countries, and then take a call whether to invest in that kind of country or not. Finally, this population growth, mortality, and longevity. Now, where does all this come from? I would like to share with you something important, so that paper number 99. While this loads, I would like to show you a small graph. Yeah, we are at, we have this money control thing here. Let me go to the Nifty. Okay, it's here. This is the Nifty chart. 5 years chart, but I'd like to go to a chart which gives you the maximum kind of thing. So probably, let's see how this works. Wait, I think
Trading view may be the best.
the the authentic chart is there. Now I go to trading view. So let's go to this chart only. Better. That will have NSE India when it is there. Why to go to some other chart where you can get full max chart available? Okay.
And all true data.
Yeah, all true data. So why not? Yeah. Somewhere this is not me. Okay, so let's not to be seen. Anyway, I think it's available on the internet, so let's take it from here. We don't want anything on this topic, don't worry. Okay. Yeah. Yes, this is the chart that I wanted to show you. This is also only up to 2007. Okay. People think that only 25. Okay, anyway. If you are able to get somewhere, if you are able to get your get the chart of 2003 or so, you will find that NSE chart, NSE, it's still loading. Okay. If you are able to see the chart of Nifty from 2003 October, you'll find that market started picking up from 2003 October. Otherwise, from 1994 when NSE started, or from 1886 that BSE started, market was not that great. It was okay. But yeah,
I have one software where that data is available from 1995 only, but it is there in my system, so I have to share that.
Yeah, please share, please share.
Yes,
please.
so 1 minute.
I will stop sharing. You share.
Please, one. I'll just
That's very good.
Yes.
Please share.
1 minute. I'm just sharing this.
Yeah.
There's a software called Ganalyst.
Hmm.
So there I normally
I have it in my hard drive somewhere, and I can.
1 minute. Disabled. You have to enable me. It's not yet enabled.
Oh, okay.
I logged in as Rajendra Angandi. Login.
Done.
Yeah. 1 minute. I'll just share this one. I'll convert it into. Yeah.
Just line thing from 20 to.
1 minute. This is 2003.
Yeah. 2003.
Which month?
Yes.
This is from June.
This is what is 2003 onwards. 2003 October. Yes. Not there. Some 2003. Just October 2003 onwards, and then you can see where it was in where we were in October 2003. Somewhere 14 and 1200 or 1400 was the
Exactly.
Nifty was at around 1200, 1400.
On 28th of April 2003, it made
Not the lowest. Don't take the lowest. Somewhere in the first week of October 2003, or even if you take the highest of 2003 October, you will find that we were at around 1500 or something.
Yes.
Yeah.
It is there now.
Now, can you show the full chart
Like
from 95 to today?
okay,
The single screen.
I'll try this. This is a manual one. Not many people like to use this one.
Pardon?
This is a manual one.
Sir, ಇದ್ರೊಳಗೆ ಹೋಗ್ಬಿಡ್ರಿ ಟ್ರೇಡಿಂಗ್ ವ್ಯೂನಾಗ ಹೋಗ್ರಿ ಅಲ್ಲ 91 ಇದ್ರ ಕೂಡ
91.
From 91 you get.
So can you go to the trading view?
Sure.
Anil?
Yeah. Yes, why not?
करेक्ट सर नितिन बोलतो नमस्ते
बोला कसे आहात?
काय नाही ट्रेडिंग व्यू मध्ये 1991 पासूनच दाखवा लागले काय तिथं
There are a lot of calculations that I did it here.
ट्रेडिंग व्यू मध्ये गेला तर 1991 पासूनच
weekly chart you can do it. This is much better one. Your screen is paused.
Okay. I think this will do.
Shall I share it once again?
Pardon?
Shall I share that screen once again?
No, yeah, please share it. Yeah, this will do. You can.
Duration has changed to weekly. Now
No problem. See, fantastic.
But I get these disturbed readings here.
Okay, no problem. You can do a monthly chart also. I think that is if you can do it a monthly chart, then it is.
Now this data is disrupted.
Yes, somewhere here 2002, you will find that 1500, and now we are at 18,000. Yeah, you can see here this journey started in 2003, and now please make me a host. I want to share something.
Yeah, true, definitely. I'll just stop share.
Yeah, stop share and make me a host so that I'll share what.
Yes, sir.
Done. Thank you. Okay. Yes. Where does this all start? this start. I think fundamental analysis. Pramod sir would have taken a lot of trouble in teaching all this company analysis and things like that. And like, we'll look at it later on, because this is more important. Where does this all start and how fundamental analysis is done? This is very important. So just look at this paper. This is known as Global Economics paper number 99. And title of the paper was Dreaming with BRICS, the Path to 2050. And this was published on 1st October 2003. This is the date when India was introduced to the world as an investment destination. Not in 1991 when liberalization started off. A good 13 years after liberalization started off, this was the first time that India was introduced to the world as an investment destination. And from then onwards, this journey started. How do these people do? I think it's a big paper, so let me not take a lot of time in telling you what this paper was all about and all. I can share this paper with you sometime later on. What this paper basically tells us is that India will overtake, these BRICS countries will overtake various countries. So India will overtake Italy in 2015. It will overtake France in 2020. Germany somewhere in 2022-23, and it will overtake Japan in 2035. This is what this paper talks of. And all BRICS economies put together will overtake G6 in 2040. This is what it says. And when China will overtake various other countries, and when Russia will overtake these countries, when Brazil will overtake, when all these BRICS will overtake. So this was a study made. And let me go to why this is important. It's because, look at this. Look at this paragraph. Demographics play an important role in the way the world will change. And look at this. Okay, so yes, look at this chart here. The chart clearly says, you can see here, this is India. This is India's population, working age population in the country. You can see other countries, G6 going down, China also going up somewhere in 2005-10 and then coming down drastically. So we are here in somewhere in 2022. Now you can see where we are. We see that China and India has the same population with working age population. Brazil has more working age population now, somewhere in 2022. And it's time that India's working age population keeps growing, will not grow, but will not go down as in the case of China or as in the case of other countries. That is because they started population control programs somewhere in 1980s and 90s, which is the result of that is working age population is going to go down drastically in the next 5 years. So that's a very important thing for us to understand. So when I say we look at mortality and longevity, that is what it means. Yeah. So population growth, mortality, longevity. काम करने वाले लोग चाहिए पैसा कमाने के लिए, and even in the country that is the case. So this is how we look at the economy fundamentally. We are trying to find out how many working hands are there to increase the GDP. So you will find that even if India's GDP is not going to increase very fast, it's not going to grow so fast. but we will be able to catch up with the others because of the sheer numbers that we have. Anyway, and that's one. Then we look at sector. Sector, though, I think it's like a beaten dog. Everybody must have spoken about it. We look at where money is going in, where investments are going in. Every time there is a budget, everybody talks about it. It says now in this budget and earlier budgets also, a lot of money is being poured into defense, into infrastructure, etc. So the investments are pouring into infrastructure. The size of the sector is increasing. Question is dispersion and distribution. This is another thing that we look at. Whether the sector is growing uniformly across India or whether it is growing in bits and pieces. Earlier, it was growing in bits and pieces. If you remember earlier days, you will find that infrastructure was very good in Gujarat, in Maharashtra, in Karnataka, in Tamil Nadu, and very bad in eastern part of the country. Now, look northeast policy or look east policy and things like that. You find that infrastructure is growing uniformly elsewhere also. Even in Uttar Pradesh, earlier there used to be a joke called Bimaru states like Bihar, Madhya Pradesh, Uttar Pradesh were known as Bimaru states. Now that is not the case. They are no longer Bimar. They have picked up a lot of infrastructure is going into them. So every sector which is growing, where investments are there, you look at the size of the sector, you look at the distribution of that sector, then growth of that sector. Again, this information would be available in your RBI bulletin most of the times, and contribution to the GDP from that sector. I would not take too much time on this slide. I'll not even talk about this analysis because you already know most of it. Porter's model, that, this and all, everything. So let's go to company analysis straight away. Let's take one company and start doing some kind of
Yes, sir.
Where do you do this company analysis? Tata Motors. You go a little. Don't look at all this. All this is for your market participants. That this and all. Let's go to. First, let's go to management. Now,
Anil sir,
yeah.
the screen is not visible. Not shared.
Which screen is being seen?
That paper number 99. That working in India. Okay.
Really? Okay. Now?
Yes, now it is visible.
Thank you. What do we look at? When we look at company analysis, management of company, we look at who is behind this company. Who are the promoters? Who is managing it? Are they professionals or are they just family members? How is it being managed? So that makes a lot of difference. Look at this Tata Motors management. Look at this. Ratan Tata, Gunther Butschek, one independent, one more independent, non-executive. So there are 1, 2, 3, 4, 5, 6, 7, 8 directors. Out of the 8 directors, you have 4 independent non-executive directors, and then of course Ratan Tata is not a director at all, he's chairman emeritus. So 7 people out of 7, there are 4 independent non-executive directors. Makes a lot of sense. The majority is independent directors. Now look, this is one example. Let's go to the other example so that you will get a idea of what I'm talking about. Let's go to, yeah. There you have this company, and Reliance Infrastructure Limited. 1, 2, 3, 4, 5, 6, 7. Who's executive, who's independent, who's non-independent director, not given. So you have to make your own guesses. Let's look at another interesting company. Yeah, this is a very interesting company. When you look at these companies, you will also find out that उनका भाव भी उतना ही रहता है, depending upon what kind of management it is. See, look at this. You have again the chairman and 1, 2, 3, 4, 5, 6 directors. Out of them, one is CEO. There you go. So whether these companies are very particular about telling you what kind of what kind of people are behind it, etc., makes a lot of difference. Let's look at one more last company, the darling of the markets. You know why these companies are such darlings of the markets. Look at this. Here you have 15 directors and 1, 2, 3, 4, 5, 6, 7, 8, 9 in non-executive directors. Out of them, 8 are independent directors. One non-executive director is Nita Ambani herself. So you remove that. You will have 7 people who are non-executive independent directors. Others are all family members, of course. Mukesh Ambani, Hital Meswani, Nikhil Meswani, and Nita Ambani. 4 people are family members. But in a group of 15, you have 8 people who are non-executive independent directors with big names like Deepak Jain, a professor, Raghunath Mashelkar, YP Trivedi, big names, Arundhati Bhattacharya, ex-SBI chairman. So this is what is pedigree all about. The moment you look at when you say management analysis, you have to be very, very careful in finding out who are the people behind these companies. If you find that most of them are all family members, they are all paid directors, then there is no fun in investing in those companies. Obviously, the market understands that much better. So that's about management analysis. Then obviously technology. What kind of technology people? What kind of technology the company is employing now? Again, Tata Motors is in the limelight for technology. First one to start EVs. First one to roll out EVs in large scale. and has been successful. So things are going according to plan for this company. So what technology this company is chasing, that's also a very important thing. Maruti has not yet decided on whether it will have a EV vehicle or not, or whether, if it has, when it is coming. Nobody, a lot of should I say fluidity in the system. So we look at what technology people are talking about, and then of course finally we look at valuation numbers, and numbers that is there. Now we don't have time to do all kinds of analysis, because now it's not required. You get income statement, you just pick up an income statement, it's there. Quarterly, half yearly, 9 months, annual. You can see this company was doing very badly earlier. Now things are turning around. March 2022, probably this company will turn around. It will become a bit positive. It's been having, last 3 years it's been making losses. This year expected to turn around. Ratios, of course, this is a loss-making company, Tata Motors. So let's not look at the ratios here. We'll just move to there you go. One minute. Yeah. You can see how revenue has been growing, whether net profit has been growing or not, whether EPS has been growing or not. Book value per share, what has happened? Return on equity, what has happened? And of course, debt to equity, there's no question of debt at all in this company, TCS. So data is all available. You don't have to now think about the data at all, and not even required to look at the numbers. You can straight away look at the charts. So, what has happened to the EPS, what has happened to diluted EPS, book value, dividend, etc. So all ratios, per share ratios, margin ratios, gross profit margin, whether it has been increasing, decreasing, net profit margin, what has happened, return on net worth, return on capital employed, return on assets. So all ratios available. No need to look at any kind of, no need to do any analysis, no need to do any calculations. Things are available off the shelf. So then what is required? What is required is you have to do some digging of the information about people who are behind these companies. That is more important than anything else. I know most of you have seen Shark Tank, and those who have seen Shark Tank remember whenever somebody came for a pitch, one question that was always asked was, क्या तुम्हारा background क्या है, कहाँ से आए हो, क्या education क्या है, कहाँ मिले आप दोनों को, what is your vision? See, this is what is required these days to invest in any company. You don't require great numbers. You require to invest in people behind those companies. That is more important, because earlier what used to happen, as a fundamental analyst, I used to sit down, collect annual reports of companies, and put all that data in Excel and do my own analysis, because no data was available. Now data is available full, no issues at all. But now you need to do people analysis rather than data analysis, because data is fully prepared. All analysis is there available. एक बार देख लिया तो you will know what is happening to this company. But why it is happening? Whether it is moving in the right direction or not, whether is there any change happening, that can be only done by looking at the management. So that's where I think we should look at. Now, finally, where to invest and how to look at trends. If you observe what you are consuming in the last 10 years, how things have changed in consumption, you will realize that things are changing and there are companies which are making money out of the way you consume things. 10 years back in Hubli, there used to be one shop which was selling mattresses of Coir and Spring. One shop. Today, every nook and corner you have these Duroflex and Carlon and Sleepwell mattress and all these kinds of mattresses coming. Otherwise, it was only Gadi Karkhana. So now Gadi Karkhana, they have come down. That's a big change. And that has picked up very, very fast. So that way, there are a lot of trends. Now, electric vehicle is another big trend that has happened. Probably, I don't know how many days this will sustain. But every nook and corner, anybody who has 5 lakh rupees to invest has started off electric scooter showroom. So that's another very interesting thing that has happened. Another trend you can look at in the FMCG market, Hubli is full of small grocery stores which look at it. They're just grocery stores, but they look like supermarkets. Small ones, like what they call them 7-Eleven, whatever. I think a lot of Vijay supermarket and things like that. So these are the trends one has to catch. And if you are able to catch these trends and pursue further and find out where all this is coming from, which company all this is coming from, then you will realize that where your money is, where your money needs to be invested. Reliance Retail has been promoting such people who would like to set up their own small stores because they are wholesalers. So a lot of trends that are coming up. Only thing is we have to keep our ears and eyes open and find such trends, find such places where we can invest our money. Suddenly you'll find in the market also this buzz that Tata Power, there's a big buzz. There's a buzz for all power companies. Why? Because people think that these power companies will start doing well because they will set up charging infrastructure across the country. Kitna sach hai, kitna jhoot hai, only time will tell. But as of now, there is a fad going on in the market. So one has to catch these trends and then look at the various companies that are there in these markets. See, consumerism has taken up in a big way in the country. Consumerism here means maybe first time when white goods market started booming in India, it was just televisions and refrigerators. Now the net has widened. Even air conditioners has become something which has become rampant. It was not there so much. It was not. ACs were not picking up so much. But even in places where climate does not require an AC, people are now putting up an AC just to show off, or just because they want that 21 degrees all the time. So these trends decide which company that you should look for. And not only that, you also get an idea as to if the right people are behind such companies, then you will be able to pick up the right kind of investment ideas. Right. So, oh my God, we started at 2:30.
2:30, yes, sir.
It's already 3:47,
3:45. Yes.
3:45. So let's go to. I think there is one more thing on the agenda. So let's go to that.
Yes, sir, please.
Option trading was what on the agenda, isn't it?
Option trading and post-merger issues. These were the two agendas left.
Option trading. How many of you all do option trading? Can you raise your hand?
In fact, I discourage the students not to go for option trading until and unless they get the confidence of entering the market. But there are some who do it.
Some people are still doing it. Excellent.
Many are into equity cash segment.
Okay, so let's look at option trading. Let's look at what is that derivatives market. Okay. I need to share the screen, isn't it? I'll share it. Yeah. Okay. This is the Nifty.
Yeah.
You can see here, these are all call options. 17,000 call option traded at 83 rupees 50 paise. 16,500 put traded at 178. This is the old way of putting it, but anyway, since it's there, I'm keeping it that way. Right. You can look at this table here. 3rd March 2022, 17,500 call. Last traded price is 9 rupees. Volume is 7,78,918 contracts. And highest open interest there. I have just sorted this according to open interest. And the highest open interest is in this contract is 1,07,000 contracts. What does this tell us? It tells us that 1,07,000 contracts are open in the market. That means a lot of people are interested in this 17,500 call. Now, how does one get interested in this call? How does open interest actually get? How is open interest born in the options market? That is a question. Can somebody tell me how open interest happens? How open interest is born in the market? How open interest gets introduced in a contract?
Some of you can unmute and give the answer. Amit?
Yes.
Yeah.
Sir, what's
How does this open interest come into being?
Sir, if a buyer and seller come together or initiate a new position of one contract.
Hmm. So a buyer is required and a seller is required, isn't it?
Yes, sir.
Hmm?
Yes,
Who
sir.
gives birth to this option contract?
seller, sir?
Correct. 100% right. So you may be interested in buying any of these contracts, but if there is no seller, you will not be able that contract will not take birth at all. But if you are interested in selling a contract, you can give birth to a contract. You just put a price, somebody will buy. So maybe a little difficult for people to buy, but still the biggest role that is played, if you look at if you give a percentage to it, then 70% of the role is played by the seller and 30% played by the buyer. With that said and done, if 17,500 call has the highest open interest, what does it mean? It means there are a lot of people, and basically to sell an option, you require more money than to buy an option. That is a very fundamental thing. To sell an option, you have to give margin. To buy an option, no margin required, only whatever is the premium that is required. So if I am supposed to buy this Nifty 17,500 call for 9 rupees, all I have to pay is 9 into 50 rupees. And if I want to sell this call, I have to pay 17,500 into 50 into 0.12 or something like that, around 12% or 10% margin. That's around 1 lakh of rupees. So I should have 1 lakh rupees to earn this 9 rupees to sell this option. And I can as well have only 9 into 54, what? 50 into 9 is 450 rupees to buy this option. So that said, 17,500 strike has the highest open interest. What does this tell us? It tells us that the market, those people who have money, I'm not saying those people who are intelligent. What I'm saying is those people who have money, because let's not talk about intelligence or people who are savvy investors or whatever. Those people who have money think that by 3rd March, market will not go beyond 17,500. So they will get to pocket this 9 rupees. Next highest open interest is 16,500 put. Again, 1 lakh is the open interest. What does this tell us? Today market, it has closed at, this is today's thing. Today market has closed at 16,658. And the highest open interest on the put is at 16,500. That basically means that those people who have money, those people whom we look up to as see again, the thinking is जिसके पास पैसा है उसके पास दिमाग है मार्केट में, बाहर नहीं, क्योंकि पैसा उसने दिमाग से ही बनाया है और पैसा उसने मार्केट से ही बनाया। सो जिसके पास पैसा है उसके पास दिमाग है और वो ऐसा सोचता है कि दिस इज 16,500 का पुट जो है he will sell, make 409 rupees. This is 31st March 2020. So our people who have money, who are savvy investors, now I'll call them savvy, they think that they can simply pocket 409 rupees per lot. And imagine you have 1 lakh rupee, you give 1 lakh rupees margin, and what you get in return is 409 into 50, so that is 20,000 rupees. if, and their thinking is market will never touch 16,500 up to 31st March. So nobody will come to exercise it at 16,500. So they'll get to pocket all the premium, all the 400 rupees. So investment of 1 lakh giving you 20,000 rupees. What is the thinking? Thinking is since we have the money, we will do it kind of. 16,000 put is at 251 rupees. This is much more interesting. That is, they're taking lesser risk because I'm 500 points below. So investment of 1 lakh, they're taking home 10,000 rupees, 10% for the entire month. Then you have 3rd March call and puts, 18,000 call and 16,000 put. 18,000 call, 1 rupee 65 paisa. This is like money on the ground, on the road. 16,000 put is again, people think that it will not go to 16,000 in the next week, because this is next week's expiry. Okay, so this is one way of looking at it. Look at the open interest figures and take a calculated justification on where the market is expected to go. Next, we'll use this. We'll use this 16,500 put and 16,500 call. So because we are at 16,650, so okay, we will use 16,600 call and 16,600 put so as the data. So let's look at what happens to the option. So let's say 16,600, this is the put, and 16,600 call. I only have to put the premiums there. I hope this is visible.
Yes, sir. It's visible.
16,600 put is
613.
600 put is 213 rupees 55 paise. So 16,600 put is 213.55 and 16. Oh, sorry. Should have used it here. 16,600 call. Remove this. 16,600 call. Let's take. Let's see how much is it going at. 16,600 call. 16,600 call. 275 rupees. 275 rupees. Yeah. Right. So this is what is this known as? Buying and selling the call and put of the same strike price. Strangle. So this strangle is profitable from 16,150, between 16,150 and 17,050. This triangle is not profitable. Once you cross, if the market falls below 16,100, this triangle is profitable, and above 17,050, this triangle becomes profitable. That you can see in the graph also. This is the maximum loss. What is the maximum loss? Maximum loss is at 16,600 only, because that is where, and that is 24,427 rupees. So to buy both these things, both these calls, you will both these options, you will require 24,427 rupees. If Putin prolongs the war and does something very drastic, then this 24,000 rupees will give you a yield of you will make a profit of something. If Nifty goes to 15,800, you make a profit of around 15,000. If Nifty goes to 15,500, you make a profit of 30,000 rupees. And if nothing happens, if he simply withdraws, Sensex, Nifty will go to 16,000 and Nifty goes to 17,600, you make 25,000 rupees profit. So, and if they keep on talking, if every day they keep, instead of war of tanks and ammunition, if it's just war of words, then you lose your 20,000 rupees. So this is what happens with the triangle. Let us look at the same triangle. If you sell this triangle, what will happen? So 16,600, you sell the call at 275 and delete this off, and sell the put at 213.55. 16,600, 213.55. So if you do that and delete this, so you will remain profitable between 16,150 and 17,050. So this is your profitable range. If market goes below that or above that, then you lose money. The moral of the story is pretty simple. In the earlier example, you were expecting the price to, I think I will draw here. So I need some freehand drawing. So I will draw here. Insert line.
Text.
Chart, map, link, text, symbol, Excel में किधर okay, forget it. I have a PPT running behind, so let's use the pen in the PPT. In the first, this is visible, no?
This is visible, sir. This is visible.
In the first triangle, what we were thinking was that the market will either go below 16,1 below a price or above a price. It will not stay in this range. The next thing what we are saying is market will stay in a range. Another thing that we can also talk of is market will go up. Market will go up or market will go down. So, moral of the story is, if you are in the market, then you need to have an opinion. Your opinion will be either the market going up or market going down or market going beyond a range or staying in a range. So two horizontal decisions and two vertical decisions. if you don't have any of these opinions, any of these judgments, then there is no point in being in the market, because there is nothing like, you don't get something like formula where wherever the market goes you can make money. It does not happen. You need to have a opinion in the market. So that is what the market is all about. So this is what a strangle is. Same thing can become a straddle if you sorry, this is what a straddle is. Same thing can become a strangle if you simply change the no, that becomes a strangle. And the range becomes a little wider. You have a set profit somewhere in between. So this is selling a strangle, and the earlier one was buying. You can buy a straddle, buy a strangle, sell a straddle, or buy or sell a strangle. I would always suggest that let's look at 15,500 will be the starting point, and then let's say you sell this 16,650. You sell the future. The chart is not looking fine. Anyway, let's go to the NSE website and Nifty options is here. Let's pick up Nifty futures. Excuse me. Hello. We'll speak after half an hour. I'm in a meeting. Yeah. So I've opened a new thing here. We'll just look at the futures. NSE 50 futures, Nifty 50 futures. Okay, let's say you buy Nifty at 16,667, and if you are able to sell the 16,700 call or 16,800 call, you could sell the 17,000 call also. So 310 rupees you get. So what happens? You buy at 16,667 and sell at sell the 17,000 call at 310 rupees. So that means that even if Nifty goes down by 300 points, you're still in profits. And so if let's say if Nifty futures goes down by 300 points, 16,667 becomes 16,367. You lose 300 rupees on the futures, but this 310 rupees is in your pocket. So you're profitable till 16,300. If Nifty goes to 17,000, whatever money you lose on on the option, you make money on the future. So it's a perfect hedge. So buying a Nifty and selling a higher call is also called as what? Covered call. Only problem is during volatile times like this war and all, 300 points is nothing for the Nifty. You can see yesterday Nifty went down by 1,000 points. So 300 points is nothing for the Nifty. But given a chance, in other circumstances, this is a fantastic thing to do. And for buying one Nifty and selling one call, you don't require margin of two Nifties. A smaller margin is more than sufficient. A little more than the buying of that Nifty future. That much margin is more than sufficient. Makes perfect sense. Here, of course, you can play it for 3rd March also. Let's say you want to play it for 3rd March. 3rd March, 16,000. 16,000 or 17,000 call of 3rd March is 83 rupees. So you buy at 16,667 whatever. You buy at 16,667 and sell this at 83 rupees. So you are hedged until the Nifty goes down by 83 rupees. If it goes down below 83 rupees, below 16,600, then you end up in a loss. Otherwise, you are hedged for 83 rupees. So this is a game that can be played on a weekly basis. This game becomes interesting if you start playing it on, let's say, Monday evening at 3:15 and Tuesday evening at 3:15. I suggest you take a pen and paper and write down on Monday evening, 3:15, whatever is the futures price, you buy future at Monday or at 3:15 on Monday evening, and and sell a call which is maybe 50 rupees above or 100 rupees above that strike, above the spot price. The strike price above that, maybe 50 rupees above or 100 rupees above. Sell that call and check it in the next day morning. You would have made something like 30 rupees or 40 rupees on that. That's fantastic earning, because for a lakh of rupees margin, you get for a day you get 30 rupees. 30 rupees into 50 is 1,500 rupees. So for one day, if you are able to get an interest of for 1 lakh 1,500 rupees, that's fantastic. That's 1.5% per day, and this you can do 2 days in a week. So with a margin of, let's say, not 1 lakh, you need a margin of around 1,30,000 or so. With a margin of 1,30,000, you could make 3,000 rupees every week, 3,000 to 4,000 rupees every week. And that's real good money, because all those Saudi people in Hubli who give money at 5%, 6% would be thrilled to do this kind of work also. No offense, I'm just joking. So this is something that one can easily do, provided one has the time, inclination, and the patience to do this religiously. But if you get carried away by you sell a call and then it goes down 10 rupees, you think अभी ले लेता हूँ, बाद में 10 रुपए में और 10 रुपए ऊपर जाएगा तो बेचता हूँ. You start doing this kind of trading, then you will get stuck. But if you concentrate and are very disciplined, then I think that is the right way of taking it forward. So in derivatives trading, what we touched upon is straddle, strangle, buying and selling of straddle and strangle. And we also touched upon some covered call writing, combining future and call writing. That much would be sufficient. Will not go
Yes,
too
sir,
deep.
that would be sufficient.
Yeah, I will not go too deep into it. Now let's go to the HR class. Nitin sir has asked me to take an HR class, so let's take that. Yeah, 15-20 minutes to talk about it.
Yes, sir.
Post-merger issues. I come from an engineering background, and I would like to share with you certain things about post-merger issues from the engineering industry. Even while I was teaching, I was very much involved in the engineering industry. So let me tell you some interesting things that happen when there is a merger. Tata Motors took over Land Rover and Jaguar. All the drawings were in MKS system. All the drawings were in inches and foot and things like that. In Jaguar Land Rover. And Tata Motors had started using this SI system, the metric system as it is called as. All drawings were in millimeters, micrometers, etc. There you talk of 1/4 inch and 1/8 inch and 1/16 inch, etc. So obviously, first issue is measurement. Second issue is, we have this accounting. We have basic accounting conventions like accrual, consistency, matching concepts, etc. But revenue recognition, accounting in terms of cost centers. In some companies, quality is considered as a cost center. In other companies, it is not considered as a cost center at all. It is considered part of the production line. So there are a lot of issues which start popping up. So why should a quality control general manager be paid the same amount as the production general manager? Aren't they doing the same kind of work, or aren't they the same general managers? Or just because he's from quality doesn't add any value, doesn't perceptibly add any value to the balance sheet? Should we pay him less? If you go to Toyota, it's the other way around. The quality guy gets more salary than the production guy. So, lot of issues. Otherwise, things keep changing. And when there is a merger, all these things happen. Then formats. Every company has its own format. Now, the merged company may not be, people may not be familiar with those formats. Another interesting story is this. I'm a direct sales agent for Diwan Housing Finance, now which has been taken over by these pyramids. They had some, this Diwan Housing had some criteria to give you housing loans. The new company has a new criteria. And those people who were given loans, or those people who were promised loans in the old criteria do not qualify in the new criteria. That creates a lot of heartburn, lot of attrition, because people think that way, naya company wala acha nahi hai, humko chhod ke jana chahiye. Then salary issues. Old company paid higher salaries, new company pays lower salaries, or old company paid lower salaries and higher. New company is ready to pay higher salaries, but they are all incentive linked, they are all productivity linked. So all such issues crop up. That's why I said, most of it is all HR. Later on, of course, it becomes finance, but because everything gets measured in money later on. But these issues are there. We had one more interesting story that came up. That was regarding that was what happened to Hindalco in Belgaum. It was earlier known as Indal, which was a Canadian company. And the Canadian company had their own way of running the aluminum business. They had quarters, they had free electricity given to all 800 houses who were in all 800 people who lived in those houses. And there was a clubhouse. There was a movie which was shown every week. The children of those employees had buses, had a bus to go to school, etc. So a lot of perks. When Hindalco took over, they started cutting down one by one. They said, clubhouse is available provided you pay for the services. Then the badminton court, which was supposed to be free, became you were supposed to pay some nominal amount for maintenance and things like that. Tennis courts, same case. Movies, they started selling tickets, 2 rupees, 3 rupees. It was not much, but still there was a ticketing done. Electricity was they started charging little amount. All such things start happening because when you merge a company, when you take over a company and merge it with yourself, you tend to align your expenses, the new company's expenses to your older company's expenses, and therefore all this kind of adjustment has to happen. So it's now 20 years that it has become Hindalco, but earlier all these teething troubles were there. There were troubles for the management because see, after all, the people in the management are also employees of the company only. They are not owners of the company, but the owners tell them that you have to somehow rationalize a lot of things. तो ये rationalization के चक्कर में मेरा भी पर्क जाता है, मेरा भी घर जाता है, मेरे भी घर को भी भाड़ा देना पड़ता है. All these kinds of things start happening. And then culture. You have earlier it was a multinational company. The culture was monthly meeting. You have performance review every month. You have a review meeting every month and then a performance review every year, kind of thing. Suddenly you join the Birla Group, and Birla Group has a Parta system. Every day in the evening, earlier in those days there used to be a fax which used to go to the chairman's office. Today an email goes. Earlier there used to be a one-page fax. Now everything is wired. It goes. It's there in the ERP, all built in. But here now you have a daily reporting. Earlier it was all monthly reporting. People used to enjoy life. Now there's no question of that. Every day you have to report all your every day's revenue, every day's cost of goods sold, every day's gross profit gets looked at by Kumar Mangalam Birla himself. So he may have never come to Belgaum, but he knows what is happening in Belgaum, kind of thing. That's the way Birlas run their empire. So a lot of things change when a merger happens. It's not just that it brings in, in textbooks we keep saying that it brings in a lot of value, that this and all, but in real life, a lot of new things happen. A lot of overbearing kind of supervision happens. sometimes, and usually this happens with, has happened all the time. Those companies which were liberal, those companies which went a little, which went easy on their employees, those are the ones who got sold off. And those who run a tight ship, those who keep control of their costs, they don't sell off because they are profit oriented. So, close watch on expenses starts happening, and then a lot of belt tightening, as they call it, happens. Lot of cost cutting, lot of lab cutting happens. People, and there are only, if there is one general manager for quality in one company, another general manager for quality in the other company, then one of them has to go home. I have a friend who is GM quality control for a company called Chrysler. Now Jeep, they make Jeep vehicle. This guy runs two assembly lines, one for Jeep and one for Tata Nexon. Both are made in the same factory, and this fellow is in charge of both the assembly lines. It's a very funny feeling, that both these vehicles are from two different companies but are made in the same factory by the same people. This is what happens when mergers happen, and there's a lot of cross pollination of ideas, etc. A lot of good things come up, but there are a lot of challenges also. The challenges are basically with respect to combining operational issues like how to send an MIS. The MIS system in one company would be different, the other company would be different. Reporting would be different. Reporting style would be different. Culture would be different. So all these things make a lot of curious cause of study for after mergers. Anything else that you wanted me to cover on post-merger issues?
Sir, you have spoken about issues. Can there be some success stories also?
All these are success stories only. Hindalco has been a success story. Hindal was not doing well, but Hindalco now is doing extremely well in Belgaum also. When Madras Aluminum Company was taken over by this Anil Agarwal group Vedanta, it was not doing well at all. Most of them, most of the times you find that whenever there is a merger or whenever there is a takeover or any amalgamation, the amalgamated structure actually makes the best ones survive. So, most of them are successes only. Very few failures of mergers, because the dominant one who takes over that company and merges it with himself or herself has a pre-planned agenda on doing on taking the company forward. Otherwise,
I have explained to them about the motives, what can be the motives and how the companies are going to be successful considering those motives.
Yeah.
That is what I have already theoretically done, and also I have taken up some case studies also wherein there have been successes and also failures.
Yeah.
Through which they are in a position to understand. It was good enough that you pointed out on how Jaguar, when it was taken over by Tata, the metric systems, they make a difference. The smallest of the thing.
Because, the engineers are not able to
read through it. Yeah, read through it.
It becomes they have to relearn, they have to unlearn, relearn.
Yes.
And,
so
I have another small example. This was long back when I was working in Mumbai. We got merged with one more company in Mukam Global. We used to do all our reporting. We used to do all the calculations in Microsoft Excel. And suddenly the new company, the new bosses were all familiar with Lotus 123.
Okay.
Makes a lot of
huge difference.
it becomes a big, a big thing that the new bosses, then you will have to learn what the new boss understands.
Yeah. Otherwise, survival itself is going to be difficult.
Otherwise, survival is at stake, so you need to learn new things. So that
You cannot be happy with whatever you have learned and say that, yeah, this is what I'm going to do.
or you have to leave the job and go.
Yeah, that's it. Right. Students, do you have any other doubts which sir can address about?
Any specific questions you have, please ask.
Yes. Do you have any queries? No queries?
No queries means I have bored you enough.
Nahi wo. You have given them an insight about what a trivial aspect can also make a issue in the organization.
Yeah.
So issues can be several. You find something, it can be an issue to you. So
Correct.
yes, sir. It was very thought-provoking, and they have understood about smallest of the things can also be a problem when mergers and acquisition happen, and as you rightly indicated, survival of the fittest and also sustainability comes into picture. Yes, only the people with the right thought will sustain and carry on. Otherwise,
Adaptability is the most important thing in corporate life.
yes, sir. So you are not adapting.
If you are not able to adapt yourself to the new culture, then it becomes a big issue.
Yes, sir.
Forget mergers or something like that. Something very personal I would like to share with you. Last, I run an engineering industry these days.
Yes, sir.
And engineering in the sense we do construction, we do steel buildings projects.
Yes, sir.
I had taken one new site supervisor in December.
Okay, sir.
On 1st of December. We are 3 directors. One of our directors looks after all the production and projects. I look after HR finance. The other one looks after marketing and engineering. Since this director who was looking after projects and production was busy with his daughter's marriage, for 2 months I was handling production and the projects. I had recruited one person, one site engineer in December. My style of working is a little academic because of my background. I'm used to giving a little free hand to people, and I have a different style of working. This fellow was 2 months he worked under me. Yeah, he was okay, not so great, but I could put up with him. But the moment his new boss came in, 10th of February or something, this boy did not survive for 10 days. 20th February, this fellow put in his papers because he was not able to survive with somebody who is a hardcore production and projects guy. So things not only companies, but even when a boss changes, things have to you need to be a little bit flexible. You should adapt to what
new things are coming up.
For the job, yeah. Because there are always new rules for new people.
Okay, sir. Right, sir. It was a pleasure having you.
Thank you.
Thank you very much for the insights that you have given to the students. I appreciate it wholeheartedly. Thank you very much, sir.
Thank you.
Pramod, sir.
Thank you very much for a wonderful session.
Thank you.
Non-stop, without any loss in the energy. A wonderful session. You touched upon many aspects of SAPM as well as derivatives. What caught my eyes, probably of the students' eyes, is how the management team that is showed through moneycontrol.com, the independent and non-executive directors, and related to how the company is performing. So that was an eye-opener for my students as well. hope the students have taken some insights out of your session, and they will adopt these when they start investing or when they become the such analysts. Many of them are hoping so. So this would have definitely helped them. So thank you once again for giving us time to speak for our students on 3 subjects: security and portfolio management, as well as mergers and acquisitions. Students, I hope they have learned. There's a lot of takeaway from your session. So once again, thank you so much. I will be in touch with you.
Thank you. Thanks a lot.
Sir, you can make me the host.
Just a moment. I'll do it. Just a moment. I will make you host and I'll leave the meeting.
Yes, sir. Right, sir.
Thank you. Thanks a
Sir,
lot.
thank you so much. Students, how many are present now? There are 46 students. Some responses.
Yes, sir.
Yes,
Yes,
sir.
sir.
Yeah. So I hope the session was good enough.
Yeah, sir.
Right. So some insights, very small, minute things, some fine tuning was required. So that input was given by Dr. Anil Garag. And I hope you have enjoyed this session, and hope
Yes, sir.
to see you implement these sessions in your investment processes. Right. So we'll be sharing the feedback for Google Sheets, and I request all the students to fill it up seriously. And then by tomorrow, I will send the assignments relating to SAPM and derivatives market for this particular session. And Nitin sir will send an assignment for the mergers and acquisition session as well. Is that okay?
Yes, sir.
So thank you so much.
Thank you, sir.